All right, good morning, everybody. How we doing today? Hope everybody's doing all right. Hope the world is treating you well and it's full of happiness because here we go. Good morning, Arturo. Good morning, Cab. Good morning, Adriana. Nice to see you guys today. What do you say we talk about patterns? Hey, Miss Debbie, Grant, Vittorio, great to see you guys. Pretty excited about the day. Um, Been a lot of movement in the markets. We're going to see if we can capitalize on some of those patterns that tend to repeat themselves. Broke 90 yesterday. Nice job, Ron. I did too, to the north side. Shot 92. Scorcher. 87. Oh, I thought you meant golf. You shot it. Oh, you shot an 87 yesterday? Hell yeah. I shot an 87 going into the 17th hole. And then that last par 5 got me. The last par 5 got me just a little bit. Yeah, I got excited. I'll tell you what, though. You want to talk about analogies and comparisons is when I was in, so I've been trying to do it on my own, right? I've been trying to watch YouTube videos and go out and learn to play golf. And I've really just been trying to do it on my own. And um, the reality is I didn't fully understand what I should have been doing. So I'm out there, and it's funny. My brother took a picture of me while I was in Sarasota, and I look like quasi freaking moto. I was so hunched over the ball, and I couldn't rotate. I looked like a windmill, like I was bent at the waist and looked like a windmill. And my brother's like, dude, you're making it so hard on yourself. So we literally went to the driving range, and he goes, you got to stand up straight. You got to stand up. And I stood up. And then he goes, all right, you gotta twist. And he really walked me through the swing, and it was pretty cool. And I've been practicing it. So I've had 2 range days and 1 day on the course. And it's pretty cool because I've added about 10 to 15 yards to every iron through body rotation. And my shots are a lot straighter than they were. And one of my biggest problems yesterday, and the only reason I didn't beat Ron in the 80s, is I kept overshooting the green. My goal has always been to hit the green in 3 on a par 4, and now I'm overshooting it in 2, and I'm getting all this distance. But the analogy is for trading, guys, I didn't know what I didn't know. I didn't know what I was doing wrong, and I needed that feedback. I needed that outside set of eyes just to tell me, hey, this is what you did, and this is what you can do, and this is how you do it better, and now just practice it until it feels natural. And I'll tell you what, yesterday it felt more and more natural. And I think that golf is about the closest to day trading that you can get. Because at first, you're not sure what you're doing wrong. And I was the same way. I didn't know why I was losing trades, and I didn't understand why trades were working out, and I couldn't read my indicators. And then you get a mentor, right? That's me, guys. I get to be your mentor. It's pretty exciting. Um, but what it does for you is it gives you a set of eyes looking from the outside in saying, hey, this could be a little problematic, or hey, I noticed that you did this, or hey, I noticed that this is creating challenges for you. Let's work together to fix it. And that's what we do in this room is we talk about the mechanics, the trade rules, and then from there, it's a lot of practice and a lot of feedback. And that's really all we're doing is a lot of practice and a lot of feedback. So let's do that today. You guys give me the opportunity to give you feedback by showing me pictures, and we'll work together to get everyone in the 80s. But before we do it, forexfactory.com, right? Got to make sure that we're not trading in the news, make sure that there's nothing going on that can make the world a little crazy. We've already had our 8:30 news. We had some high impact news, had some medium impact news, and then at 10:30 we have crude oil inventories. So you guys that trade crude oil, careful, right? They're going to jockey for position at 10:30 a.m. when they release the barrel count or whatever it is they do. Somebody may react. So knowing when this news is really the first advantage that you're going to give yourself. Good morning, JW. Whoops, and I'm going to bring up my Snagit. And then, guys, we're going to go through. We're just going to do the slideshow again today, and we're going to talk about it. And we're going to talk about what it is that Nexgen is going to do for you. We're going to talk about the best way to do it. And when I say the best way to do it, I'm going to teach you how to study. I'm going to teach you how to look for patterns that repeat themselves every day in the market. I'm going to teach you how to enter the market for a high probability trend trade, with a trade that typically wins 70 to 80% of the time. And we're going to focus heavily on that trade because, guys, this is the trade that makes you a chart reader. And 90% of your day is going to be chart reading. So for you newer folks with me, 90% of your day is going to be chart reading. You're literally going to be looking at these indicators and waiting for advantages. And what you're going to find is that the better you get at being patient, the easier day trading becomes. So we're going to focus on a trade that teaches you to become a chart reader. You will understand where the market is likely to continue, and you're going to use that as an entry point. And you're going to understand where the market is likely to go, and this is going to let you take profits at Fibonacci areas when things slow down. And you're going to understand where the market is likely to stop, which is going to be a huge red flag waving in front of your face saying no more trades into this area, because it might stop the market. It may reverse the market. We're going to focus heavily on trade entry precision. That's going to be the entry for the high probability trend trade, because what you will find without question is that the better your entries are, the more manageable trades become. The easier it is to lose less if they're not winners, the easier it is to make more if it's going to go. And then that's where the trade management comes in. That'll be the third thing that we talk about. Just teaching you where trouble spots are, right? So that you can take profits if it's appropriate. Understanding when a market is slowing down. All of this chart reading is going to be designed to have you focused and speaking in terms of advantages when you look at your chart. It's also going to have you very focused on getting the best entry so that you can manage your trades. And then finally, the final piece of the puzzle will be the management. And the management is something that you're going to work on for probably the next 10 years, because you're always going to see more. You're going to get smarter every day, and it's going to create more opportunity every day. So the step-to-step path to becoming a confident trader. Everybody wants to be a confident trader yesterday. Everybody wants to be profitable yesterday. Cav. Everybody wants to be great at something brand new in their first week. And guys, that's not realistic. Not at all. Go take up tennis and tell me that you're John McEnroe in your first week, right? Go take up golf and see how close to Tiger Woods you get in your first week. Guys, it's not realistic to want to be the best of the best in the first week. Yeah. So you have to focus on the process that yields results and give yourself a little bit of time to get to where you need to be. But the easiest way to get to where you need to be is post your trades in class. Everything that you do, share it with me. Talk about what you see. Talk about why you enter. Talk about why you exit. Show me your entries, show me your exits. And then you're going to get to the point to where you write your rules on a chart. Every time you take a picture of your trade, you're going to identify where it came from on the chart. You're going to write it out. You're going to identify the momentum. You're going to identify whether or not you had a clear path. And you're going to show me where you entered. And then through this little bit of annotation, guys, you get a private session with me. Every time you post in the room, you just signed on for a private session. I'm going to look at your charts. We're going to talk about advantages. And we're going to make sure that you're doing things the way that you should be doing them. We're going to make sure that you understand what it is that you're looking for, that you're looking at things correctly, that your entries were appropriate, and that your exits make sense. So every time you post in the room, we're going to have a conversation. And I always celebrate victories, guys. I'm not here to beat you down or make you feel bad. I'm here to lift you up and really get you on that path. The second thing is using your spreadsheet. Making sure that you're filling out your spreadsheet. So that puts me, Adriana, where's your partner in crime, Miss Cindy? She's sleeping in today? I wanted to see if she got her spreadsheet taken care of. Guys, this spreadsheet is your trade journal. Nexgen gave you a copy of it. It's in your Nexgen Study Picks folder. I'm going to give you my copy of it. This is my own personal copy. But there's three parts to the spreadsheet. There's the copy of your tracking. Every time you take a trade, you should put it in there. Describe what you saw, how you felt, how it ended up. And then there's a notes section. So every time you get feedback in the class, no, Adriana, don't worry about it. Don't call her. It's okay. You're not her keeper. You know how Cindy is. Miami nightlife. It's going to make you sleep in every now and then. But guys, this is your trade journal. This is where you're going to track everything that you're doing. The second is your trade setups. As you build a plan, as you recognize these patterns, start taking pictures of them. And then finally, there's the client trade section, guys. And this is about 300 pictures of you guys using the software. Most of it is the high probability trend trades. Some of them are medium probability trend trades. And now I'm starting to add in those momentum trades because there's a lot of you guys that are taking these, and I want to get a really solid pattern down for everybody to go after. But the idea on the spreadsheet is that every morning you study what you did yesterday. If I took 5 trades yesterday, I'm going to wake up, pour a cup of coffee, and I'm going to look at 5 trades from yesterday. I'm going to look at my annotated charts, and I'm going to make sure that I'm trading and following rules. I'm going to see what I did well, and I'm going to try to repeat that. I'm going to see where maybe I fudged the rules a little bit or didn't do things quite as well as I could have, and I'm going to know that from the feedback. And then I'm going to be able to focus first thing in the morning on not repeating those mistakes that are costing me. It always asks, how'd you feel, right? What felt easy? What kept you relaxed? Telling you right now, guys, when you have overwhelming momentum, you're going to feel relaxed because you know momentum is there for the win. And then what feels forced is when maybe you're breaking those rules. Maybe you're trading into areas where the market is likely to stop, or maybe you're jumping in too soon, or maybe you don't have the proper advantages. But this brief historical study is going to prepare you for the day. It will accelerate the learning, and you'll be pretty surprised at just how quickly you can get to where you want to be. So post in the room every time. Make sure that you're annotating those charts. Use that spreadsheet. Go back and study it. Commit these looks to memory. And then we're going to spend the first hour. It's more of a lecture than a discussion, but if you want it to be a discussion, all you have to do is post a question in the room. But we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. And we're going to do that with the high probability trend trade because that's the trade that teaches you to read your indicators. You guys can simulate. You can get on there and you don't. Adriana, did you really call her and drag her into the room? Good morning, Cindy. Guys, you can use the simulator. You can go with absolutely no risk, right? You're amazing, Adriana. Muchas gracias. Um, all you're doing is practicing. That's it. You're at the driving range. You're in the batting cages, right? You're in the cage rather than swimming with the sharks. So simulate every day. Post your pictures in class. This is where you really want to make mistakes, guys. In your first 30 days is where you want to make every mistake possible, but you want to get in the habit of starting to write on your chart and focus on trading the correct rules, because what happens is when you get lucky on simulator, right? You're not following the rules, you're jumping in, you're trying to be super cool and making that simulator millions. When you go live, what you're going to find is that puts a huge hole in your plan, and that luck typically runs out. So simulate every day, annotate about advantages, and focus on taking the correct rules. And then I'm going to give you a plan, guys. I'm going to drop it right in your virtual hands, and it's going to be a plan that is simple. It's only 2 trades. It's focused on advantages, and it really revolves heavily around getting into the market at the right spot. You have to understand what looks you're going to commit to. What does it look like when your rules are met? What does it look like when it's time to take a trade? That's where taking those pictures comes into play. And the more you study those pictures, guys, the easier it becomes. And the easier it becomes, the less nervous you are when it's time to take a trade, the more confident you are when it's time to pull that trigger. And that's a process. And building trust takes a little bit. But the more pictures you take, the quicker you're going to get there. You did get it, Cindy? Awesome. So now we're going to teach you how to fill it out, right? You've got to make sure that you're loading that thing up with pictures. Does everybody have their capture software so they can take pictures? I'll pull mine up real quick. That seems like a good place to pause. If I'm going to tell you, but you can't open the pictures, so if you click on the link, it won't let you open the pictures. I want you to do this. I want you to hold down the control button and click on the link. Actually, my link should be good. I just clicked on one. So like if you go to the third page and you click on perfect 50-50, it doesn't bring you to the perfect 50-50. I'm not sure. Maybe you have an older version. I wish I had an answer for you, but I don't, unfortunately. We're going to get you fixed, though. We will get you fixed. I may need Jason to help get you fixed, but we will get you fixed. You could try to right-click the link. Yeah, there you go. Right-click the link, copy and paste it to the browser. That may work as well. It's a little more work, but if you go right-click, and there should be open hyperlink, maybe that would work. I'm not sure. Where's all my stuff? There it is. So guys, we're going to get through this, and we're going to work, and we're going to take pictures, and we're going to understand what it is that we're looking for, guys. And all of your pictures need to be written on. All your pictures need to have, yeah, Haji, you have to push control, then click. Every picture should talk about the advantages that we're looking for. Every picture should really remind you why you got in and tell you, so that if I come back and study this picture, I can look at where I came from, and I can look at the strength of my triggers, and I can look at whether or not I have a clear path, and then I can understand why this trade didn't work. So we're going to use a high probability trend trade, guys. This is going to teach us to read our charts. This is a trade that has 3 rules. Each rule gives you an advantage, is the easiest way to say it. When rule number 1 is met, you have the advantage of momentum. When rule number 2 is met, you have the advantage of a clear path. And when rule number 3 is met, you have the advantage of entering where the market is most likely to continue. And this goes back to that being a chart reader. These 3 rules come to be on only 2 charts, guys. We're going to keep it simple. Simplicity will be the battle cry for us today. The large chart is a slow-moving train. It's a broad stroke of a brush. The large chart is a reflection of what the people that move the market want to have happen. We use the first most current bar on the large chart to be able to gauge direction, momentum, and areas, whether or not we've reached an area that may be problematic or whether or not we've cleared an area so that it's no longer a problem. The large chart is going to have both rules 1 and 2 met on it before we ever look at the small chart, which means that before we ever go to our entry chart, we'll have the advantage of momentum as well as the advantage of a clear path. And when I say there's a clear path, I mean that there is room to your target. There's nothing in the way, and there's plenty of time to make money. The small chart is nothing more than an entry chart. It's a refinement chart. It takes this 1 bar and it kind of does an X-ray. It shows you 15 to 30 bars within this 1 bar. We're going to use that refinement process to pinpoint exactly where the market is most likely to continue. And this is going to be your entry for the highest probability trend trade. Rule number 3 is designed to get you in at the best of the best spot, allowing you to reduce your risk and maximize your profit potential. So we're going to focus on each rule individually. We're going to break it down. We're going to look at them. If you have a question about it, let me know. We're also going to go to the live market. We're going to look at examples of it. Guys, if you're simulating today, post your pictures in the room as I talk about rules. And then after we talk about these rules and look at them, we're going to go back and look at everything that you guys post in the room. So large chart must have strong trigger lines, guys. That's rule number 1. The large chart has got to define direction as well as momentum, and momentum comes through those strong triggers. And the only way I can have strong triggers is if I'm trading with the trend. The large chart's going to tell me whether the market is going up or down, and it's going to do that with the color of the background. If the background is green, the market is moving up. I'm only looking to buy the market, to go long. If the background is red, the market's going down, and I'm only looking to sell the market to go with that downtrend. To short is another way to say it. So when it's up, we're going to buy, and when it's down, we're going to sell. And guys, this is the sell concept killed me as a brand new user. Somebody brought it up yesterday. I got to tell you, Mark, how can I sell something that I don't own? It's the futures market, guys, and everything is equal opposite reaction. If I buy in a green market, I'm going to sell to get out. And if I sell in a down market, I'm going to buy to get out. It's just cancellation. So going with the trend is going to eliminate probably half the mistakes that the average new user makes. And then rule number 1 says that we must have momentum. And you know what? I'm going to show you this picture first. Let's define strong triggers. Strong triggers mean that in a downtrend, when everything is red, both your small triggers, these solid lines, which are a faster moving trigger line, and these large triggers, the dashed lines, which is a slower moving trigger line, these two work together to produce momentum. And when there is a separation, nice job, Cindy. When there is a separation between the small and the large, this is your strong trigger look. You can see it in a downtrend, you can see it in an uptrend, you can see it coming back to a downtrend. The only way to have odds favorable momentum, the only way to have strong trigger lines is if all the colors agree. Guys, if your smalls are up and your large are down, you don't have strong triggers. And if your large are down and your smalls are up, you don't have strong triggers. And if the background doesn't match the color, you don't have strong triggers. And strong triggers, guys, is the key to most of what we do. Strong triggers in a downtrend, where's my mouse? There it is. We're going to sell a pullback on a smaller, faster chart. Strong triggers in an uptrend, we're going to buy a pullback on that smaller, faster chart. And we're going to be able to buy and sell these pullbacks at Fibonacci areas. And while the large chart looks like it has a tail or a wick, this is the dissection of the bar on the small chart. We are going to be able to pinpoint exactly where the top of that tail is most likely to form, or exactly where the bottom of this tail is most likely to form. And we're going to use that through the refinement process. So strong triggers, guys. There is certainly a life cycle. When the separation is there, smalls and large are wide, they're angled in the direction of the trend. They're like scissors that are open, ready to cut. Guys, this is odds favorable momentum. You're going to hear it in the room all day long, odds favorable momentum. You're going to see it annotated on charts, OFM. And guys, this is the best of the best. This is when we're looking to sell resistance on a smaller, faster chart and ride that wave of momentum all the way down to the next key areas. And then with both triggers down, when one of the small triggers gets inside of the large triggers, this is the first sign of slowing. Short trades can still be taken. You can still trade with the trend. You can still trade with the direction. You just got to make sure that everything else lines up for it, that you have that clear path, that you do have the entry area. And then when the small triggers, with both triggers down, once both the small triggers are inside of the large triggers, you have a weakening or a slowing of the trend. Anything can happen is the term that you're going to hear in class, guys. You can still take a short trade, but you have to be aware that the momentum is gone, and you're going to end up making sure that you manage these aggressively, taking quick profits, getting to break even as soon as possible. So odds favorable momentum. This is the best of the best. This is what we're looking for. Weakened triggers really take away that advantage. And for the brand new user, avoiding those weakened triggers is really advantageous because it simply isn't a look that is likely to stop the market. So we're going to end the show real quick and let's go to the live market and let's find some examples. Whew, there's a consolidated market. Let's go see if we can find, that's my untitled workspace, guys. So I'm going to go to crude oil, and there's a market that's just grinding to the upside. So we'll go back and see if we can find some examples. Separation, strong triggers, the market's likely to continue up. It does. Strong triggers, break key Fibonacci areas. Strong triggers, buy Fibonacci support. Strong triggers, sell Fibonacci resistance. Sell Fibonacci resistance. Guys, over and over, Crude oil's been dancing a little bit. Odds favorable, it continues up. Odds favorable, it continues down. Odds favorable, it continues down. Scroll back on a chart, guys. Go back on a large chart and just look at it over the last 10, 20 days and see how many times strong triggers pushes that market in the direction of the trend and how many times weak triggers precedes the beginning of a reversal. Strong triggers, down it goes, all the way to weak where it reverses. Is everybody cool with the look? Look at the strength and look at the push. Strong triggers can break areas. Strong triggers create the most important advantage I think that we have. Almost everything that Nexgen teaches revolves around momentum, guys. And here, using the live market for an example, the large triggers are up and the small triggers are down. Does everybody see how there is no odds favorable momentum? This is the first rule. And what you're doing is you're looking at the idea that you're not going to make money every second of the day, every move. So why do I reference them when using the charts, David? And that's okay. Let me show you a picture. The reason I reference the tail, and David, everything regarding the reference of the tail goes back to the idea that the large chart leads the way. Everything about the tails goes back to the idea that the rules are met on the large chart. And when they are, if you circle this tail, remember how I said rule number 3. Let me pull it up because I'm going to do 2 charts. This is why. Whoops, wrong one. There we go. Large chart defines the direction. Large chart defines the momentum. Large chart defines the areas. When I have strong triggers, when I have a clear path on the large chart, David, I'm going to buy Fibonacci support on a smaller, faster chart. Are you comfortable with the 2 chart concept? And then we're going to go to the next picture. Cool. When everything says up on the large chart, let's take a picture of the picture so that we can annotate a little bit, right? I'm looking at one bar right here, David. I'm looking at this one bar. And this is what it's telling me. It's telling me that my momentum is the strongest. That's rule number 1. It's telling me that it hasn't yet reached this divergence high, which means that I have a clear path. And my triggers are above here. So everything is right for a trade. Would you agree? At the top of the bar? And then what happens is on the large chart, I don't know if it's going to go from a mid-band. Oops, that's the wrong one. I don't know if it's going to go from a mid-band. I don't know if it's going to go from the top of the triggers, the middle of the triggers. I don't know if it's going to go from support. All I know is that the large chart says everything is ready to go to the upside. So what we're going to do is we're going to use the smaller, faster chart, David, and we are going to buy a pullback at Fibonacci support. We're going to buy a pullback at the mid-band inside of triggers. And the reason that I reference the tails, the only reason that I reference the tails is that if I scroll back historically and I circle a tail when the rules are met, if that circle lines up with rule number 3 being true on the small chart, then I know that it was a high probability trend trade. So let's go back and find an example. And let's see if we can just find the perfect example with momentum. All right, so David, strong triggers. I'm just going to circle this tail. And then I'm going to scroll backwards and look for that circle on my smaller, faster chart. Do you see how it pulls right back to support inside of favorable large triggers? Over here, there's nothing telling me that that's where it should go, right? How could I possibly pick 50-80 on a larger chart? It's floating in the middle of nowhere. It's below a trigger. It's above support. No, I have not missed the trade, David. If I wait for the tail to form, I've totally missed the trade. But David, if I take a pullback on a smaller, faster chart, watch it happen. And we'll go through an entry. I'm going to leave my circle here, David. And we'll go through this entry together 100% to make sure that you're comfortable with it. But before I do that, let me go through the 3 rules. Because right now, all we've talked about is momentum. And what we really need to do is we need to talk about a clear path as well. We need to make sure that there's nothing in the way. And then what's going to happen, David, is I'm going to bring it all together, and we're going to go through 2 or 3 different sets of entries. But I promise you 100%, I will focus on entries heavy today so that you can get confident in that look. Fair enough? Let me get through the rules real quick so that everybody can follow along. But David, you are my focus for the day, I promise. Large chart said strong triggers, right? Large chart told me that the market was going up. Large chart also said that I had momentum. Small separated from the large. So let's start there for all my new users. Is everybody comfortable? The direction is up because the background is green. The small triggers are above the large are wide. There's space between the two like scissors that are opening ready to cut. Rule number 1 has been established. We have momentum. Rule number 2 says that we can't have a termination condition. Rule number 2 says, sorry, I want my laser pointer back. Rule number 2 says, termination conditions false. And by having termination conditions false, it's going to give me room to get to my target, guys. It's going to give me room to get paid is the easiest way to say it. So large trigger says up. Let's make sure that we have a clear path. We're going to do that on the large chart because the large chart defines areas. And we're going to make sure that we're not trading into a termination condition. And a termination condition is a Fibonacci-based indicator that may reverse the market based on a comparison of that area and the T3 trigger strength, T3 trigger line strength and location. So we're going to look for blue Fibonacci support and red Fibonacci resistance. We're going to look for yellow 1-to-1s, a cyan divergence low line or a magenta divergence high line, any third divergence in the same area, and a large chart midband if the triggers are a full bar away. And guys, just for you visual people, let me give you the visual of what it is that we're looking for. Divergence high and low lines. All that means is that there was a slowdown at a pivot. If the market moves up and back down, and the buyers steal momentum from the sellers, excuse me, that was hard to say, you're going to see this magenta line at a high. You'll also see a divergence line at a low. These areas may stop the market. They may reverse the market. Yellow 1-to-1s, red resistance, blue support, sometimes a midband. So what we're going to do is we're going to, there we go, is we're going to do that comparison of the area and the T3 trigger line strength and location. So the easiest way to understand whether or not it's time to pump the brakes and stop trading, guys, is if price reaches the area. These areas are where decisions are made. These areas are where buyers buy and sellers sell. These are where profits are taken and positions are entered, guys. And if you reach a Fibonacci area, in this case support, after price reaches the area, the decision-making process is set off. This may be where the sellers jump ship. This may also be where a deep-pocketed buyer has 10,000 contracts waiting to enter the market. So we're going to check the trigger lines. And if they're not below the support, no more short trades. Guys, this is a termination condition, the most pure look ever. Price reaches resistance. Where are my triggers? They remain above. No more short trades. Pretty easy concept. And when you study them when nothing is moving, it's easier to catch them in real time. So if I can't trade into support, the path isn't clear. When is the path clear? When the small triggers and the large triggers, guys, both sets of triggers, both lines of both triggers get below support, well, support begins to behave as resistance. That area is broken. The path is now clear. You'll notice that support becomes resistance, odds favorable momentum. There's one of those tails. We don't trade the tails. You're going to use a refinement chart to understand exactly where that tail is most likely to form. This becomes your high probability trend trade to use that momentum to get down to that next key level. And guys, termination conditions are going to happen all day long, and sometimes they're going to force you to be patient. Price reaches resistance and none of the triggers break. Therefore, there are no long trades per the rules. All the long trades here break the rules and get stopped out pretty quick. Price pushes all the way down to support, all the way down to that mid-band area, and I want you to pay close attention to the idea that these large triggers simply don't follow. They don't come along. That moving average stays way up top. They're a full bar away. That's the recipe for a mid-band to behave as a termination condition. If price reaches the mid-band or any fib and the large triggers don't follow, they're a full bar away, price is likely to close that gap. We call this the gap theory. Any short trades taken before that gap is closed tend to get run over. So I can't go long because rule number 2 is not met, and I can't go short because rule number 2 is not met. And then the market pushes back up, and you'll notice that it reaches resistance, and those triggers are weak. And it reaches that divergence line. This pivot on its own isn't a termination condition, but when price reaches that line and the triggers remain below, it's a termination. And then there's resistance, also a termination. I actually have 3 in the same spot. That's pretty powerful. The pivot stop out is when price trades above the divergence line, then breaks back below. Don't take any long trades, guys. If Fibonacci resistance is true, it adds power to the top. This top reverses the market. Green turns red, everything agrees. It also gives you space between the small and the large, and that bar has not reached support, so the path is clear. And then once again, the top of this tail is where you'll use a smaller, faster chart to sell Fibonacci resistance to enter the market, and it's typically right at the top of the tail. So we use that tail to study. And then guys, no matter how excited you are about going short in this situation, especially if you missed the move down and it wasn't yours, when price reaches those 1-to-1s and the triggers remain above, no more short trades. It's a termination condition. It may reverse the market. It may create an untradeable bounce. Decisions are being made right at this key area. And look at the fight. The buyers push and the sellers fight, and the buyers push and the sellers fight, and the buyers push. And guys, this is where fortunes are lost. This is where people blow out accounts. This is where people's opinions force them into trades. But if you think about the rules and you learn to speak to yourself in terms of rules, I don't have a clear path. Rule number 2 isn't met. I'm not taking the trade. And it pushes up to resistance and all my triggers are below. I can't go long. My colors don't match, so there is no momentum. And guys, this goes on for about 45 minutes where there's just nothing for you to do. Price reaches the mid-band, the large triggers are a full bar away. I still can't take the long trade because it's a termination condition. Ultimately, everything reverses, turns green, and all of my trigger lines get above resistance, and now it's looking like support. My smalls are outside of the large. I have momentum. The top of this bar has not reached Fibonacci resistance. I have a clear path. And guys, there's that tail. We don't enter on the tail, but on that smaller, faster chart, you're buying Fibonacci support inside of triggers, and we're pinpointing where that tail is most likely to happen. This is your highest probability trend trade, and it rides that momentum up to the top. So large chart is going to define lines, guys. Large chart uses lines in order to understand where the market may stop. The large chart is going to use fibs, mid-bands, yellow 1-to-1s. It's going to use divergence, highs and lows. And the lines on the large chart are typically problematic. On the small chart, we're going to use lines for entry. So on the small chart, we're going to use a line for continuation rather than using a line as a problem. So with that being said, there's one termination condition on a small chart that I want to discuss. And because it's a smaller, faster chart, because it's a refinement chart, you're going to see this termination condition before you can see change happening on a large chart. And it's 3 divergences in the same price range. So once again, divergence simply means a loss of momentum. If the market is pushing down, if a pivot is formed right around the 3rd bar, this negative number in cyan line is going to print. That lets me know that the buyers stole momentum from the sellers. If they do it 3 times in the same price range, that's going to be a termination condition. Rule number 2 is not met. Same thing with a high. If they do it 3 times and the small triggers are inside of the large triggers, that anything can happen weaken trigger look, it becomes even more powerful, more likely to reverse the market. When that third pivot is higher than the previous or lower than the previous from a high, it's more powerful still. It creates a head and shoulders pattern. Guys, we're using these three divergences at a low, those 3 divergences at a high, to help you identify change that you can't see on that larger chart. Because here the market is strong, the path is clear, and down it goes. 3 divergences in this area will help you recognize it. 3 divergences will also give you the opportunity to manage your trades if you're in them. If you're in the perfect short and 3 divergences print, it's going to allow you to manage out, to not lose money on that trade because things may be changing. So the large chart terminations are going to happen using lines. The only termination that I will respect on a small chart is going to be 3 divergences in the same price range. So lines on the large chart are going to help us identify where the market may be stopping. And then 3 divergences on the small chart is going to let us know when that change may be happening. So is everybody good? Terminations are a pretty simple recipe, guys. Let price reach the area. If the triggers don't break, sit on your hands. Just wait, see what the decision is. You don't have to be a part of that decision-making process. But so far what's happened is your large chart, the amazing beast that it is, has defined the direction of the market. The triggers are strong. The path is clear. That's a lot of information from one bar. So when this look is in place, guys, when I have momentum, when I have a clear path, rule number 3 says that I'm going to use a limit order, meaning that I'm literally going to be able to wait for the market to come to me. And I'm going to use it to buy or sell a pullback at an area inside of the triggers. This is where the small chart comes in. This is where we're going to dissect that one bar and we're going to turn it into 15 to 30 bars. And this is exactly, David, how we can identify where this tail is most likely to happen. So when everything says up, we're going to buy a pullback to support. We're going to buy low at support. And when everything says down, we're going to sell a pullback to resistance. We're going to sell high. Because we all know that's the age-old adage, right? This is how you make money. Here's the dissection process. So David, the bottom of the bar is the beginning of the pullback. And this is just one bar. The top of the bar happens to be a pullback to resistance, hopefully right inside of trigger lines. All of these bars within are contained inside of this bar. All of these bars back down to the low of the bar are inside that bar. So you get this sweep up, you get this sweep down, but your large chart never looks like it changes. And we don't sell the tails because we just don't know where it's going to happen. But if we shift our attention right, we can use that smaller, faster chart and create a window of opportunity. We can create a range where the market is most likely to continue on that smaller, faster chart. So we're going to use a limit order to buy or sell a pullback. A pullback begins with a reversal bar, that down bar after all the up bars. At the time of the reversal bar, I'm going to look for my triggers, synthetic and large. And my lines have to be inside of there, guys. So the wider those triggers are apart, the more risk, the bigger the range for continuation becomes. The tighter they are one on top of each other, the better it looks. We call this favorable large triggers when they're one on top of the other. And then the area where the market is most likely to continue extends from the highest point of support for a long to the lowest point of support inside of favorable large triggers. I want you to get in the habit of using this language. My trade comes from an area inside of favorable large triggers, inside of those trigger lines. The trigger lines are where we expect price to correct. The areas give it something to bounce off of. You're going to activate a limit order right at the top of that window. So as the market comes down, the large chart doesn't look like it's doing anything. you're going to enter at the top of the window and you're going to be in a long trade. And then if we're looking for a short trade, the reversal bar starts. We identify our triggers, the areas within. In this case, there's only one line, a mid-band. We're looking for mid-bands, fibs, yellow 1-to-1s. And this is where the market is most likely to continue. Your limit order goes just below that area. These areas outside of the trigger lines are not part of the window of opportunity. And if the market goes up there, we don't want to be in it anymore. And then the reason that I reference tails is because I can scroll back on a large chart and circle all of these tails, because all I'm doing is I'm building familiarity with what it looks like when it's time to take a trade. I'm identifying strong triggers. I'm making sure that I haven't reached the path. Guys, there's only $50 worth of money to be made right there. But because we wait for the pullback and enter at support inside of favorable large triggers, that 50 turns into 250. So David, we're not trading the tails. We're actually making our decision at the top of the bar. At the top of the bar is where the pullback starts. We're entering on the way down at support inside of favorable large triggers. And that's typically where the bottom of the tails, if it's a winner, where it happens. And then just one more picture of the two together. If I go back and I circle the bottom of the tail and it lines up with support, well, then I know that I had a high probability trend trade. I know that this is exactly what I'm looking for. And then by understanding where the market is likely to continue, you guys are going to love this. It lets me know exactly where my stop should be placed. Because if I have odds favorable momentum, if I have a clear path, if I wait for the pullback and I enter at the area inside of favorable large triggers, guys, the market shouldn't go beyond that. It shouldn't go beyond that window of opportunity. And if it does, I'm out of the trade. I have a protective stop waiting that says rule number 3 is no longer in place. I don't want to be a part of this trade. Guys, any trade that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. This is just a cost of doing business, guys. Losses are a normal part of a positive equity curve. The idea is that your losses are good losses, that they're losses that were taken when there was a statistical advantage. So for a short trade, I'm about 4 or 5 ticks above that little window of opportunity. And for a long trade, I'm about 4 or 5 ticks below. And if the market gives me a reversal bar in the direction of the trade, I'm going to tighten it up even more below it. And guys, this is really what we're looking for. This is your first 20 days with Nexgen. Is focused on entries, focused on getting the absolute best of the best, focused on making sure, there we go, that you're just not taking chances, but rather embracing advantages. So David, and everybody else too, I'm going to do this. And just so I don't confuse anybody, guys, I'm going to take off everything except my trigger lines here. And I'm doing that because all we're talking about is the entry. So I need you guys to be okay with that. All we're talking about is the entry. And I'm going to get rid of the little cheater circles. And we're going to go through it together, guys. Let me let that calculate real fast. And this is one of those drills. What we're doing right now is we're learning how to study. Come on, S&P, calculate. Everything got slow on me real quick. Here we go. That was at 1452. So here's what we're going to do. The first thing we're going to do is we're going to get rid of these cheater circles. Because honestly, we don't want to cheat. So we'll do 2 of them. All right, guys, everybody's with me now. And look at the large chart. Large chart is green, and it says up. Everybody's comfortable with that, right? If you're colorblind, and I'm not making jokes, if you're colorblind, when the small triggers break above the large, it paints it green, just in case. I've had people that are. All right, small triggers have separated from the large triggers. Everything is wide in the direction of the trade. Does everybody agree that rule number 1 has been met, that I have the advantage of momentum? The market is likely to continue in the direction of the trend? Because if I don't have it, guys, I'm not looking for a trade. Here's the second part of it. Price hasn't reached a key Fibonacci area. Here, I'll draw one in. Where's my color? There we go. Price has not reached Fibonacci resistance. Therefore, the path is clear. Everything says up, the market is strong, the path is clear, and I'm not waiting for a tail. Here's what I'm going to do, guys. I'm going to turn my attention to the smaller, faster chart. Notice that all the bars are up. Notice that my large triggers are up, my synthetic triggers are up. All I'm doing is I'm waiting for that little pushback. I'm waiting for the retracement. So let's do this real quick because I want you guys, let's go through the emotional roller coaster. Everything's going up and it's going up without me. And the market's going up and I just want to jump in because I don't want to miss it. And it keeps going up and I'm worried that I'm never going to get paid and my bills aren't going to get paid. And it keeps going up. And I'm just sad at this point because I'm not in a trade. Has anyone else ever done that? Right, David? Exactly. I know because I've done it. But here's the magic of what we teach. And guys, this is the biggest thing. The market moves in, it's got this rhythm and it's got these patterns. And guys, this pattern has repeated itself for 27 freaking years, at least. David, there's your reversal bar. And this right here says, here comes the pullback, David. I know you were nervous. You're missing out on the money, but check it out. Here's the beginning of the pullback. And David, you're going to say, all right, here's the top of my triggers. And here's the bottom of my triggers. And I know that my trade comes from an area. And guys, I want every one of you to embrace this. I'm going to type it in the room. Inside of triggers. Not from the triggers, inside of triggers. So my window where the market is most likely to continue extends from these yellow 1-to-1s inside of triggers. That's the highest point of support, closest to price. And it extends to this mid-band, the lowest point of support inside of favorable large triggers. And I also have Fibonacci support. So I have 3 areas inside of triggers. David, this yellow box represents where the market is most likely to continue if this pullback makes it. I'm going to take, not going to take a vertical line. I'm going to take a horizontal line and about 2 ticks above the highest point of support. Because remember, these guys are screaming to the upside. And I'm not going to trip over a couple pennies to save dollars, right? If they come back to my entry about 2 ticks above support inside of favorable large triggers, I'm in a long trade. There it is, David. You made it. No problem, Grant. Have a great day. Did you get all fixed up, by the way? Awesome. So I want you guys to see this bar's not doing a damn thing, is it? This chart is giving me the pushback. Do you see that fluctuation? Guys, that is a 5 or 6 tick move. But it's just a fluctuation, guys. Your small chart's your entry chart. We're waiting for the area. It reaches the area, actually 1 tick below my entry, and then it gives me a reversal bar. So my stop, David, is 2 ticks below that reversal bar. Gary, sorry to hear that. I use Tradeovate. Good reason to sim. All right, David, so check it out. I want you to see on the large chart. There's your tail, brother. Notice how your tail is the bottom of the move? We didn't need the tail over here. We needed the pullback to support. And guys, once again, the market fluctuates. So as everything goes up, watch this. I put that line too close. Everything continues up, right? You're already in, it's going. But then I get another reversal bar. What am I supposed to do? So I get a reversal bar. I have strong triggers. I haven't reached resistance. David, check out your window of opportunity. Right there. Inside of those triggers. Do you see it? Does that make sense, everybody? You've already taken one trade. Whoops. You've already taken a trade. You've already gotten in. And it went from 850 to 85 and a quarter, which means that when we talk about management, you've already made $300 and exited the trade. And now they're coming back again. And the rules are met. And there's my window. Guys, this is another one of the cool things about waiting for that entry. I'm going to put another limit order right around 81 because my rules are still met. And now I'm in another long trade. And let's go through it. I have momentum. I have a clear path. 2 divergences don't scare me because it takes 3 to be a termination condition. And the market is just pulled back to a mid-band inside of triggers. Give me a Y in the room if you're with me, guys. Not only did you enter here and get paid, but you're about to double dip. You're in, it goes to the bottom of the window, and I'll be good gosh gollied. There's another reversal bar. I'm long again. And where is that area inside of favorable large triggers? David, right at the bottom of that tail, brother. So we're not trading the tails. Of course, David, we all do. Because when the market is screaming, you've got to make all these decisions, right? When the market is absolutely flying and you're brand new and you're not super comfortable with this look, doesn't it make sense that it's going to be hard to catch while you're new? Whoops. Let me get those templates back on there. And we're going to go through this all day long, guys, and we're going to get there. Let me put my 13.2 template back on. So, David, the idea is that if you go back and you circle these tails and you see the correlation, and all I want you to do, not worry about the money, don't worry about anything. David, I want you to burn this look in your eyes. When the triggers are strong, I'm going to buy a pullback at support. That's it. That's all you're doing is you're developing confidence and trust in the idea that this is your look. Does that make sense, everybody? David and the whole gang. All we're doing is we're saying this is my look and this is my entry. And dang it all to heck, I'm going to study every picture I can of this being true. I'm going to study every freaking picture I can. Because what happens, oh man, that's a dead link. Because what happens is you're burning this image in your mind. Doesn't this look exactly like what we just did, but go in the other direction? So true story, David, once you get really comfortable with this look, and anyone that's not completely comfortable with the look, is you're going to get to a point where, and this has a termination, but right about here, David, you're going to start talking to yourself. If I get a pullback, if I get a reversal bar, I'm already identifying my areas. Let's see if we can find one that may be setting up real time. It doesn't always happen. That's not a good one. Whoops. I'm not sure what I just did there. Crude oil. Crude oil. Well, shoot. We're going to find it. And there's a termination, so we're not taking the trade. But check it out. David, right here, Aren't you already hoping for a pullback? And guys, everybody play along with me because this is a big deal. This is how you catch it. Right here, you're already hoping for a pullback. And if you're already hoping for a pullback, can't you already be looking for areas even if they don't line up yet? And as it moves down, I'm still hoping for a pullback. Guys, that's 7 bars later, and I still have the same darn areas inside of triggers, and I'm still hoping for the pullback. And I still have the area already picked out, and there's my pullback. And guys, if that market wasn't trading into a termination condition, this is exactly where I want the trade to come from. Does that make sense? You're going to start anticipating here. You can be patient to here, but the second that reversal bar happens, it's not going to let me do it. Guys, I can put my order 2 ticks below it and just wait for that thing to come down or wait for it to come up to me, and I will literally, I will have an order waiting and I will sell it while the market is coming up because of momentum, because of a clear path, because of the area inside of favorable large triggers. And this is why we have to study the pictures over and over, guys. This is why you have to know your rules, because you'll literally start anticipating your entry right here. If this market looks like this and this one like this, it's just patience. It's just waiting. But guys, we don't trade into termination conditions because they may stop the market. And when all the triggers are above support, this isn't the advantage of a clear path. Does that make sense? So David, one of the hardest things to do as a brand new user is to not look for the trade. I'm looking at my charts and I'm looking for the trade. I'm looking at my charts and all I want to do is get in. All I want to do is find an entry. So you have to start talking to yourself in terms of advantages and let it all start on the large chart. Make sure that the large chart leads the way. Make sure that the large chart says direction. Make sure the large chart has momentum. Make sure the large chart hasn't reached areas, and then refine it on the small chart. And what will happen is you'll get so stinking good at this. Let me pull up my spreadsheet. Dun, dun, dun. And we'll do an entry sequence real quick, just kind of without it moving. When your large chart looks like this, David, nothing on your small chart says get in, right? So this is where you have to start saying, so there's a process. The first step is momentum. The second is a clear path. You're speaking to yourself in terms of advantages. And this is where your brain has to say, I need a pullback to areas inside of triggers. And this is where understanding your rules and being able to say them pays dividends. I need a pullback to areas inside of triggers. And the only way that happens is with a reversal bar. And if I never get the reversal bar, guess what? It's not my trade. It's just not. But once I get the reversal bar, I know exactly where that market's likely to continue. I know that it's going to come from areas inside of favorable large triggers. And I'm looking for my triggers, right? And then I'm refining it even more to just the areas, creating that window of opportunity. I'm still on the reversal bar. This is why you have to practice. Nothing is printed except one bar. And before that second bar ever prints, almost always, I'll have a limit order waiting. And you want to know what the truth is? Is I may have a limit order waiting before the reversal bar because I understand where that market is likely to continue. Terminations for the win, right? No reason to take that short trade because I don't have a clear path. But I knew exactly where, if I had a clear path, it was likely to come from. Whoops. Not a clear path, not in at the area. Guys, there's rule number 2 for the win 2 times in a row. Oops, that is my untitled workspace. I usually close that out for class. My apologies. There's crude oil. I don't have momentum. And guys, does everybody see how 79.62 stuck that market to the tick? This is why we teach termination conditions, ladies and gentlemen. Because if you hoped it would go up from a mid-band, you just got run over. This is why we teach termination conditions. This is why you should go back and say price reached the area, the triggers remain below, no more long trades. On the same token, price got to support, triggers didn't break. Price pulled back to resistance, triggers didn't break, and down it goes. Resistance, triggers below, down it goes. Oh my gosh. Pulls back to support, none of the triggers break, and look at it go up. Pretty cool, right? Look at support hold before it breaks. Look at resistance, holding it all the way down to the mid-band, and the large trigger's a full bar away. Look at resistance break, and it behaves as support and continues up. I'm telling you guys, if you take a little bit of time, no triggers through support, this precedes the reversal. What happens is you're like, oh man, I don't think I want to trade into termination conditions, and that saves you an awful lot of money. So what are we looking for? And let's see if it sets up for us, guys. Termination, well, I'm waiting for the large triggers to roll so I can have odds favorable momentum. If I have odds favorable momentum, I need to make sure that I don't hit an area. And then I'm going to look for the entry inside of triggers if that happens. And guys, this is all we're doing for the first 20 days. And I know that I have new people in here, so I'm going to give you a plan real quick. This is the KISS plan, guys. The KISS plan is designed to get you into the market at the best of the best. The KISS plan is designed to optimize your chances of success and turn you into a chart reader. The KISS plan is not going to be the end of the world for you. It's not going to be your final bit. But the KISS plan is going to teach you to read your indicators, to get you into the market, to become a chart reader, and then eventually you're going to create your own plan based on your ability to read charts. That's going to take simulation. That's going to take study. That's going to take class feedback. And that's going to take continuous practice. And guys, you are not traders. You are waiters. We are waiting for our rules to be met so that we can take advantage of what the market is giving us. We can't impose our will on it. This teaches patience. And if you never fight the large chart and you learn to enter at the correct spot, guys, it sets you up for the second piece of the puzzle, and that's management. In the management plan that I'm putting in front of you guys, this is the most basic, opinionless, emotionless way to manage that I could possibly come up with. The same way your entry for the high probability trend trade is the most straightforward, dictated by rules. I only enter if my rules are met. So your management plan for the new user, and again, you will craft a plan tailored to your personal goals based on your experience. It all revolves around getting in where the market is most likely to continue. So guys, you've got to study these entries. You've got to go back and take pictures of these entries. You have to burn it into your brain so that you don't miss it, so that you develop the confidence to sell that market while the small chart's pushing up. And once you know where the market is likely to continue, you know where it shouldn't go, and that's where your first stop is placed. And at this point, there's absolutely nothing for you to do. Red Pill Trader, there's nothing for you to do. Rob S., there's nothing for you to do. David, nothing for you to do. Grant, nothing for you to do. It's either going to hit your stop because losses are a normal part of a positive equity curve and it's just a cost of doing business, or it's going to give you a reversal bar, guys. It's going to move in the direction of momentum. It's going to move in the direction of the clear path. It's going to move. And you're going to reduce your risk 2 ticks above that. And once you do that, once again, guys, sit on your hands, stand up from your desk, roll back 6 feet, whatever you need to do. Let the market do what it's going to do. It's either going to stop you out or it's going to go to your first target. And if it goes to your first target, you just made $100. And you know what? $100 is pretty cool because you're confident. You feel good. You're like, wow, I just got paid. This is amazing. And then you're going to move your stop to break even. And I'm not going to lie to you guys, it's a pretty ridiculous stop to be break even that soon. But for the brand new user, my goal is to get you paid and to get you safe, right? So you have zero risk, you have money in your pocket, and it makes it easier for you to hold for the second target. And the second target's only $200 in the distance. And if you reach that target, it's a $300 trade. It is $300 in the bank, and it doesn't matter what happens next. You just got paid, guys. And $300 a day is a $72,000 year. So David, I have strong triggers. Small's below the large are wide, they're angled in the direction of the trend. If I got a pullback right now, the only area is a mid-band and these 1-to-1s inside of the large triggers. But look how far away the synthetic triggers are. That's not ideal. I want these trending one on top of the other. So I'm going to instill a little patience. Here's the S&P. Termination for the win creates a reversal, establishing momentum, but I need those small triggers to break a little bit. But David, ask yourself, if I got a reversal bar right now, where are my areas inside of favorable large triggers? That's it. Do you see how quickly that can happen? If I got a pullback right now and I was willing to break rule number 2, that's exactly where the market should continue from. Does that make sense, everybody? And David, timestamp is 10:10. Well, rule number 2 is not met, right? Triggers haven't broken the area, the divergence high. That's why I said if I were willing to break rule number 2, that's where it's more likely to happen. If the small triggers break above the area, we still have an opportunity. But look how the triggers come up. Doesn't it make sense that your window of opportunity will change as well? David, this isn't a rules-based trade because the rules aren't met. But the concept is the same. No, not at all. Because I define areas here. That's it. My areas are defined on the large chart, not the small chart. I like seeing it on the small chart because I'm going to use it. This lets me know where my trouble is because it's not broken. So if I did get a pullback and I traded a medium probability trade, I know exactly where I need to take profits on the first contract. So they're there for a reason. I promise. Let's go through. Into a termination condition, not taking the trade. It's really that simple. Even with momentum, I'm not taking the trade. So David, the first part of everything is making sure that the rules are met. Remember when I said when these are split, look how it pushed up past, right? We'll see what it does. But the key is making sure that rules 1 and 2 are met on the large chart, that you have a clear path, that you have that momentum, that everything is good, and then and only then do you take it to the smaller, faster chart. Only then do you go to the smaller chart and look for those opportunities. Because the large chart leads the way. Because the large chart... Okay, David, I said 3 times, I promised, it's not a trade because the triggers haven't broken, right? It's not a trade because the triggers aren't broken. But let's do this. And here's part of it. Let's do this again, David. And I just want to pretend. I like that we're doing this. This is fun. We're just going to pretend real quick. We're going to use our make-believe. Because it's simulator. And you know what? It's all about lessons. It's all about lessons. So let me get, come on, ES, before it's too late. All right, David. We're pretending that there's absolutely no areas. The strength is there, right? There's your reversal bar. That mid-band, I'll take a loser if that area holds. I'm going to be a tick above it. If this market is going to continue up, I can identify the one area inside of favorable large triggers where it's most likely to happen. Does that make sense without the fibs, David? When I pull everything off of there, it looks beautiful, doesn't it? And I just wait to see if the market comes and gets me. But if we like money and we don't want to break rules, come on, S&P, then I simply don't have a trade. I don't have a long trade because I didn't have a clear path. So I'm not trying to decide what the market's going to do. I'm only asking myself, do I have momentum? The answer was overwhelmingly yes. Did I have a clear path? Absolutely not. Did I have an entry area? Once again, it's a yes. If I choose to take this trade, it's a medium probability trade because I don't have a clear path, which means I need to make sure that I have momentum in an entry area. And it missed me by a tick, but there it goes, momentum for the win. Does that make sense, David? Make sure the rules are met first here. And if they're not, it's okay to not take a trade. It's okay to sit on your hands and do nothing. Every entry, guys, is not an entry. Every up and down is not a trade. Every move is not your move. So, Jay, if I go back to the most basic termination condition. So I'm going to start with just the rules in front of you. Dun, dun, dun. Areas that may reverse the market based on a comparison. So right now I have a magenta divergence high. Magenta divergence high. Jay, price reaches the magenta high. The triggers are below. It's a termination condition. Plain and simple. That's it. No clear path. Smalls haven't broken the fib? Yeah, absolutely. Another termination condition. These areas won't be cleared until the large triggers are above them. But if the small triggers break above, then these areas have the potential to break with the momentum. So, great question. So the brand new user doesn't have a long trade. The experienced user may be long because the termination creates the reversal, gives momentum, no divergence, strong triggers. But we don't have to hope areas break, guys. We can simply let them break. Great question, Jay. Thank you for that. And it goes back to rule number 2. It goes back to just simply understanding that when price reaches an area and the triggers remain below, no more long trades. And guys, look what the market did off of that. When price reaches an area and triggers remain below, no more long trades. And what happens, Jay, and they're going to mess with you, is every now and then those bad boys are going to break. Every now and then they're going to break like you don't even have rules. And that one time that it does is going to tempt you to break it every time. So even though we had an entry area, even though we had momentum, rule number 2 wasn't met. There is no trade. And that doesn't discount the fact that I could recognize that there was an area inside of favorable large triggers, but I can't go to the third rule if the second is there. What do you mean using the fibs, David? Using them how? Not trading into them? Well, so there's a way to look at it. So just a fib, David? This is, and I want you to think about it in terms of the way we talked about it in the beginning. Areas are where decisions are made. That's it. Areas are where buyers may buy and sellers may sell and where profits may get taken. And that's the way to think about it. Is these are areas where decisions are made. So right here at these 1-to-1s, when the triggers couldn't break above, the sellers made a decision to push hard. But look at all the momentum the buyers had, and they reacted right at Fibonacci support. The buyers said, nope, we want it to go up. And then it pushes all the way up to resistance to the tick, and sellers said, nope, no more. We knew that because the triggers were below, and it pushes all the way down to support. and then it pushes all the way up to resistance, and then it pushes all the way down to support, and it pushes right up to that divergence high, and I'll be damned the market's going down. So David, just based on this one little synopsis right here, and this is what's frustrating for new users, is you have to tell yourself, no shorts, no longs, no shorts, no longs, no shorts, no longs. But what you've done through rule number 2, David, is you have established exactly the range that that market is stuck in. You know that if you're going to take a higher probability trade, it has to break here or here, right? So even with momentum, I'm not taking the short. And even with momentum, I'm not taking the long. And even though the smalls got above, I'm not trading into there. And just because the smalls went down, I'm not going into here. And guys, this is what we do, is we just define where problems can be. Isn't that awesome? So let's play what needs to happen. And just for the record, it bounced right off of support inside of triggers. It just wasn't my trade. So what has to happen to find a trade? The small triggers have to break above 77.25, because then this area has the potential to break. Until these small triggers get up here around 79, I don't have a long trade because my rules aren't met. And guys, that's my first hour, and I drank a lot of water, so I'm going to take just a minute. As traders, you want to be doing something, right? 90% of your day, Rob, 90% of your day, ladies and gentlemen, is sitting on your hands playing solitaire, waiting for an advantage. That's it. That's all. Sometimes you're going to get it. Sometimes you're not. Guys, we are professional waiters. We are professional waiters. Because the God's honest truth is that every move isn't your move. Every move doesn't have an advantage. Every move doesn't have what you need to get paid. So why on earth would we try to be in every move? But on that note, I'll be back in 5, guys. Stretch your legs for a second. If you have a picture, post it. If you have a question, ask it. And so far, I have to tell you guys, this has been an amazing classroom with the questions. Keep them coming. I'll be back in just a couple minutes. All right, y'all, that's enough of a break. Um, I literally can't make this stuff up, guys. It's pretty cool, right? Termination. Whew. There was a couple kind of lower weird opportunities in there where everything didn't line up perfect, and that happens sometimes. But what do you guys think? Termination, odds favorable, clear path. Where's my only line inside of a trigger? It's right there at those 1-to-1s. My large and my synthetic are split, which means that that mid band's floating in the middle of nowhere, which means the only spot that I have where I'm looking for potential continuation is right there at 79.36 inside of synthetic triggers, guys. That's my only spot. Why is that not a good spot? What's rule number 3? Pull back to an area inside of favorable large triggers. Guys, there's my triggers, right? Where's my only line inside of a trigger? The cool thing is, Rob, is that it is tight. But what I have to be willing to do is say that, well, now it's there. And now that window just got bigger. Because now my midband's in there too. So there's my window now. See how I don't even have a reversal bar yet? The world has a funny way of coming together. Oh my gosh, look, my triggers are getting close to each other. And what's cool is another couple down bars, and what you're going to see is that these 1-to-1s are outside of the window. Guys, we're doing this live. Oh, and crude oil in 2 minutes, yeah. So we'll see if they react. We'll see if they're selling off to buy or if they're just going to push down. Make sure I'm on my sim. Does that make sense, everybody, though? Still don't have a reversal bar. And if I get one, I know exactly where it's coming from. Guys, I would never trade into news. But we'll play simulator just to see what happens. Maybe we'll get run over because of news. Or maybe it'll work. Rob, are you with me, though? Termination, full reversal, odds favorable. All I need is a reversal bar, and I know exactly where the market's most likely to continue. And it is approximately a 10-tick window. But guys, there is crude news in 2 minutes. Trading into news is a silly thing to do because there may be a reaction. Arturo, you're getting it? Arturo, can I ask you and put you on the spot? You're about a week in, right? About a week and a half in now. Is it all starting to click a little bit? You're like, oh man, it was a completely different language a week ago. This is crude, Rob. Oh, and you had a question that I didn't address. I'm sorry. Let me go back. So you asked, where did it go? Sorry. Which market do you trade and why? I've been watching crude lately and haven't seen good trend trade setups. Should I be flipping around markets to see or find a good trend trade setup? And that's a great question, right? And thank you for that, Arturo, guys. If you're frustrated on day one, if you're confused on day one, relax for a minute. It gets better as you go. There's that news spike, right? It's still pulled back to resistance inside of favorable large triggers. I can't even see what the market's doing. And it just did it again, so I'll go below the reversal bar. Isn't that kind of cool, though? It did exactly what we expected it to do. And granted, that was a news jump, and there's just no reason to trade into news. But, and Ron, thank you for saying that, but it's true. The more markets you watch, typically less you see. So let's go back. Rob, if you feel like you're not finding crude trades, scroll back. And there wasn't a lot today. They pushed it all the way up so they could sell it off, it looks like. But scroll back and find those reversal bars or find those tails with strong triggers and see how many times the rules were met. And it looks like there's been a lot of indecision in crude lately, and that happens sometimes. And guys, I got out of it. Oh, look, there we go. Rules based again. Odds favorable. clear path, area of resistance inside of favorable large triggers. Is it going to get there? It did. Stop where the market shouldn't go. First target is at 03, $100. Second target has to be at 93 for $200. The only thing I'm sure of is that I have momentum and a clear path, and I just entered where the market was most likely to continue. Do you guys see it? The only thing you're worried about as a new user is that entry. That's all. And if I get a reversal bar, well, then my risk is going to go right there. Whoops. Is it going to give it to us? There we go. First target hit. Let's go break even. So we're $100 ahead. We traded momentum. We traded a clear path. We took an entry at the area inside of favorable large triggers. I've already made money and I have absolutely nothing to lose. Guys, I'm looking for a $200 profit target, and we're going to see if momentum will get us there. If it doesn't, who cares? If it does, outstanding. This is what we teach every day. That is a rules-based trade. That is strong triggers. There you go, guys. Congratulations. You just made money. And I think I even got slipped. It happened so fast. What do you guys think? Does it work? Hell yeah, it works. You just got to learn to work it. That's it. So the next step, let's get all these off of here real quick. So the next step is I took the trade, right? So now I have to take my capture software, and I'm going to left click in the upper left-hand corner, and I'm going to drag it all the way down to the bottom right. And I'm going to talk about my trade. And I'm going to circle my entry. And I'm just going to talk about, that's $300 profit, Rob. So watch this, guys. What's rule number one? Strong triggers. What am I doing now? Now I'm learning trust. Cindy, I'm learning trust. Strong triggers, what does that mean for me? It means momentum. Why am I writing both of those on there? Because not only do I want to know what the rule says, I want to know the advantage it gives. And then watch from the lowest point of that bar, write this. Price hasn't reached an area. My path is clear. No term. Are you guys with me so far? Rule 1, Rule 2, and the most important thing I think that you can write on a chart. Pull back to area, midband, inside of triggers. Rule 1, Rule 2, Rule 3. Hey, Mark, was there a short there? You're damn right there was. And here's the other cool thing, is that once you start to watch the software a little bit, you're not going to jump out at $300. You're going to get out at this fib. And you're going to turn that $300 into like $700. Are there any questions about the high probability trend trade? You just watched it live. 100%, guys. That's it. And the reality is, but it was news, that was a high probability trend trade too. That was a high probability trend trade too. We just caught the little second little run on it. But from 26 to 88 is $380 worth of profit, ladies and gentlemen. So welcome to Nexgen. I'm going to go through and I'm going to start clicking on the pictures that you guys have posted. And let's make sure you guys get some feedback if you need it. If you have questions about anything that you've seen, anything you've heard, anything that we've talked about today, I want you to post it in the room. I think Lyle got us started today. So let's take a look. Lyle, termination, higher divergence, tons of momentum. and you take that awesome pullback right at all the triggers when everything says up. I love this trade. I hate your first exit. You got scared, and that's okay. But then you got back in and you said, hey, wait a minute, this is the right trade. And then you get paid, and then you get paid. And it was funny because you're like, hey, I'm jumping too soon. Oh my gosh, don't ever get mad about that. Right? Long at 09, 23 and 40. And I love that you put in the room, Lyle, I'm jumping out too soon. Guys, remember that our job is to get paid, right? There's no such thing as too soon. Some of you will take $100 profits. Some of you will take $200 profits. Some of you will hold for home runs. But as you begin to develop a plan, Lyle, odds favorable and a clear path, that market's more likely to go up than down. You called the bottom. You entered at the bottom. And with that momentum, riding it up to the fib is never a bad choice. So great job. Awesome trade. Don't get bummed about it. If you make $1,000, don't be sad that you didn't hold. And one thing that I'll do to give myself a chance, guys, notice momentum, pull right back. I got in a couple ticks above, take my $100 at the trouble spot, and then as I get close to fibs, I tighten it up. This is one from this morning. Momentum for the win, guys. Smalls outside of the large. Everything wide in the angle of the trade. Life gets easy with that look. It's hard to stop a freight train. And then Paul, there's that good top. You take the short with the market flow signal. Termination, you take the first one at the triggers. Get out at the first sign of trouble. Not willing to lose money. Nice job. Nice trading, Paul. And then Paul again. Getting back in and making more money. The jerks bumped you and made it to the mid-band. I love it. So Paul got in and say, arg. It happens sometimes, right? Especially right before news. You're 9 minutes before news there. Gets a little tough. Joel, everything says up. It's that slow grind on the way up. Could have taken that mid-band, but you wait for everything to agree, and it's easy money. Joel, I like that. That's a heads-up trade. That's not at all a high-probability trend trade. That's like an awesome chart read. Everything says up. Let me wait for every trigger to agree, and I'll get paid on the way up. Joel, great trading, man. It's like somebody replaced my old Joel and replaced him with this Joel that's competent in trading chart reads. I love it. Pineski, we saw that one, sorry. JW. I wish I could have addressed David's there. JW, everything says down from a termination, odds favorable. There's your entry. Boom, boom, bang, boom. Money, money, money. Nice job, JW. Momentum for the win. Haji. Momentum for the win. Golly. Entry inside of the large triggers, very split. But the large chart said giddy up to the downside. You guys want to hear something cool? Is this trade right here. Nexgen taught it in 2004. That trade is 19 years old. Termination, pull the pull back to the triggers. Pull back to the triggers. Termination, pull back to the smalls. Pull back to the smalls. Guys, this is your first shot before the trend trade sets up. The trend trade did set up, but that's it. Man, Haji, great trade. JW, great trade. Joel, you going to show me the same? Hell yeah, you are. Great trade, Joel. Lyle, it's just easy, isn't it? It's like stealing. It's like stealing when it's that easy. And you're working on your third PA account today, trading at 2 lots, you're up 26,900. No, Lyle, that's impossible. With all this snake oil BS going on in this room, you're really up $2,700 on a 2 lot? It's funny, guys. Um, there's no doubt in my mind that this is the greatest software ever. And I think I say that every day. There's no doubt in my mind that this is the greatest software ever. That when you're looking to sell high and buy low, we can define exactly where it is. Couple other indicators to make sure momentum is on your side, and then just refining the entry, guys. But here's the deal. You have $1 million hammer. Look, stop to the tick with weak triggers. Are you kidding me? What a great place to take profits. This is the $1 million hammer, guys. You started trading fib numbers in 1979, and they still work, don't they? They still show up in Nautilus shells and sunflowers and on faces. Guys, fibs are huge. So trade from 2004 Nexgen says termination reversal. That may be the first one. That's awesome. Oh my gosh. And you survived it. So what do you have to do? You got to learn to read charts, right? So Fibonacci, for you guys that don't know, and this is kind of cool. I did a little research when my brother told me what he was doing. So the Fibonacci sequence, it's from an Italian mathematician, and basically all it is these numbers that repeat themselves, and there's a Fibonacci sequence that goes through, and it shows up in these numbers and all these different things. And guys, it's math, and math kills me. But if you start putting it on nature, you start seeing the sequence. You see it in plants, you see it in the Nautilus shell, you see it in DNA strands. Even the Mona Lisa uses the proportions from the Fibonacci sequence. And it's really pretty outstanding. Oh, there it is in a galaxy. So Fibonacci's been there forever. Fibonacci's been around for a really long time. But what you can do, and what people used to do, and I'll show you how it works, is people used to do these measurements by hand. And they would come through and they would measure the swings in the market, and they would say, hey, if it does this, then it does this, and then this is where it's likely to pull back. And guys, this is a 38.2, a 50, and a 61.8, right? These Fibonacci levels, we'll see if it bounces off of one of them. But John Novak had a client. He used to sell software, believe it or not. And he had a client that he met, and this client measured these fibs, probably like you did, Lyle. He would spend 2, 3, 4 hours every morning doing these Fibonacci retracements, these projections. And they would go through all of this and measure it and create these areas. And my brother, who is a complete overachiever, if you've ever met him, we have the gap theory, don't we? Price into a mid-band. Large triggers below. That may be problematic. We'll see if it closes the gap. But notice that the large triggers are right at a 786. But my brother said, man, this has got to be easier. And you know when you find your thing, you're excited about it? He found his thing, and Fibonacci was his thing. And he goes, I'm going to automate it. And I still remember, this was like 1996 when he started. And he started the process, and he started the programming, and he started the algorithms, and he started all of that sort of stuff. And he and his wife lived in a tiny little apartment. And I'm pretty sure if you work with Mark Dean, high five him, because Mark Dean kept them alive while this happened. And then one day my brother called someone, a buddy of his in Chicago, and said, here's my fib numbers, man. And sure enough, his numbers were pretty much spot on. And he goes, all right, I've got it. And Nexgen was born. And so Nexgen has been dedicated for the last 27 years to teaching people how to take advantage of these, to recognize low and high, to see these recognizable patterns. Guys, this is the gap theory. If you reach a mid band and the large triggers are a full bar away, straight out of the user guide, price is likely to close the gap back to the triggers. The mid band is a termination condition when the large triggers are a full bar away. What does that mean? It means that it keeps you out of this long, and it keeps you from thinking about that long, and it says to you, if I'm really going to take a long trade, it's got to come from somewhere down by these large triggers. I'm going to let it close the gap. Does that make sense, everybody? It's a little patience piece. Little patience piece. And all we're doing right now is we're developing recognition in the looks, guys. We're developing trust in the methodology. We're developing this sense of being able to read your charts effortlessly, and that only comes through repetition. I can't make anybody great at this, but what I can do is give you the patterns and something to study. And then, Rob, you said that there's not any opportunities, but I can teach you how to go back and see if you missed something, right? And I can teach you how to do that. You heard gap theory? So Haji, you heard gap theory, and you're still working on recognition. So you're there, right, Rob? If I have odds favorable and a clear path, let me go burn this image in my mind. You hadn't seen the gap theory yet? It hasn't quite made it. It hasn't quite made it, but it kept you out of this long, which is amazing, right? Money in the bank. We'll see what happens. NASDAQ is divergence happy. That happens sometimes. NASDAQ was trading in between ranges last time I saw it, so we'll come back and see what this one does. But let's look at the S&P. Whoa. Termination, full reversal, odds favorable. Now we have the potential to break here. But I have a couple divergences right at that fib. I'm losing momentum without the advantage of a clear path. And then the NASDAQ, look at that. Caught in between two fibs. Whoops, that's that new mouse. Caught in between fibs. 1, 2, 3, 4 divergences in the same location may terminate a trend. Guys, are you catching all of these rules? That's all I'm talking about. Odds favorable momentum. Watch this. Odds favorable momentum with the potential to break. There's your pullback to support right at the triggers. Makes it up to the key area. Triggers try to break. 3 divergences in the same price range says, you know what? Not happening, Cav. Don't take the long. But the smalls are still above. I'm not going short into support. I'm not going long into resistance. So guys, what's my option? If I don't have triggers of degree and color, if I don't have a clear path, what should I be doing right now? Nothing. It costs nothing to do nothing. Guys, what you're learning in Nexgen and what you're learning as you become a day trader, as you start focusing on these things, is that you've got the greatest job in the world. You sit on your ass in a chair for 6 hours a day. And for 36 minutes, you're going to actually get work done. But that 36 minutes that you spend working is $1 million business. Be a professional waiter. Not going short. Can't go long. It's pretty cool, really. I'm still amazed every day at the fibs. Even my brother says it. He's like, I wrote the darn thing. And he's still floored. Remember when I said decisions are made at key areas? I just killed my NinjaTrader with that big drag. Watch this. It's about to disappear. Son of a gun. There it goes. Guys, when you get excited on your NinjaTrader, don't drag it around a lot. I'm notorious for doing that. I get too amped up in class. Let me reopen it real quick. That was my fault. That's a NinjaTrader thing. That is not a Nexgen software thing. Oops, it's the wrong password. So I'm going to bring that back up. But this is what we do every day, guys. Every day we talk about these advantages. Every day we talk about these patterns. Every day we do more and more. And we try to just get ourselves comfortable with what we're looking at. There we go. I kept putting in the wrong password. So recognition comes through repetition, guys. You should be taking a lot of pictures, right? So that trade that we took live, I need to click share link, and that's going to give it to me in screencast. And then I don't even know what a COT report is, CK. It's a great question, but what does that mean? Hey, Lyle, take care. What is the COT report? Oh, and I'm totally going to give you the Sunday school answer. So I'm going to apologize in advance that I have to give you this answer. That's my basis for a trade. That's it. No. Commitment of traders? Traders are idiots, CK. I don't trust their commitment one bit. Not even a little bit. You know what I trust? Momentum, a clear path, and an entry area. It rarely lets me down. Yeah, you're welcome. And then the one thing, I'm not sure if you were in class for it this morning, but the one thing that I will do is I'll look to see where the people who are influenced by news may have the potential to react, right? High impact, medium impact. So what I do is, so tomorrow morning at 8:30 a.m., I know that the core PCE price index is coming out. I don't know what that means. I'm not going to lie to you. I'm not that smart. Unemployment claims I get. But I won't make a decision based on this. The only decision that I'll make is that I absolutely, positively refuse to trade 5 minutes before news, and I refuse to trade until news settles down. So that's about the extent of my usage of news. And I guess you're very right, though. Paralysis by analysis. I like the way that flows. But check it out. Determination never broke. Tons of divergences. Confirmed that it probably wouldn't. Now I'm just waiting for stuff to set up. Maybe I can find an opportunity to go short. And you're welcome. Keep asking these questions, because the cool thing is, guys, if you ever stump me, I'm obligated to get smarter. Because I can't see COT and then not find out what COT is. So I'm opening up crude oil right now. It looks like it pulled back to that support and then headed back up. It missed those synthetic triggers. Well, that's pretty darn close, isn't it? And now it's doing everything that termination condition suggested that it might. So what are we looking for now, Rob? Talk to me. I've got a termination that's created a reversal, right? It's starting to give me odds favorable momentum. Looking for everything to pull together, right? Just looking for everything to pull together to give me that easiest trade that I'm looking for. So I don't think I have any more pictures to look at. Did I miss anybody's pictures? If I did, I apologize. Give me a timestamp and let me know when. And then, Rob, here's one of those things right here, right? My large are up here. My synthetic are down here. There's a mid-band floating in the middle of space, but the only thing I have is this fib at 78.89, which would be a retest of Fibonacci support. No, Rob, because I didn't know what the COT is. Wait for your rules to be met, brother. That's it. Rob, did you play any sports growing up? It's analogy time. And Novak's suck at analogies, I'm not going to lie. And this is for everybody. I think almost everybody played sports growing up in something, right? Basketball and baseball. Cool. So, in order to hit a baseball, it's not just hit a baseball, right? Your coach didn't say, "Hey, Rob, hit the ball." He said, "Hey, Rob, I want your feet a little more than shoulder apart because I need you to have a solid foundation." Hey, Rob, I need you to get that right elbow up if you're right-handed. If you're left-handed, Rob, get that left handle up. Don't let it droop, right? Rob, I need you to swing through the ball. Rob, I need you to keep your eye on the ball. So there's a process that yields results. And it's the process that creates the hit. It's not the desire for a home run. Does that make sense? Gino, you played luge, polo, and fencing. That's pretty awesome. Polo's terrifying to me. So, why are you taking pics, Rob? Why does Tom Brady watch video? Why did Tom Brady, if he threw an interception, why did he watch the video? Right? Why do teams, remember the old days when there were 35 millimeter films? Why did we watch the video? Why do we watch the replays? I love it. That was pretty random. We watch the video so that the next time it happens, we can be better at it. Rob, you take pictures of entries so that when it's happening live, you can catch it. Because just like David said earlier, when it's live, it's hard to catch it because you're wound up in emotion. You're so excited and you learn from your mistakes on film. The same way, let me pull up the picture real quick. The exact same way. Oh, let me find it. Guys, I have the Sunday school answer for everything. And what most of you don't realize is that I've made every mistake that you could ever make. So Rob, if you take this picture with absolutely nothing in the moving in the market, that picture tells you without any emotion or fear of a trade exactly what it looks like to have strong triggers, doesn't it? So doesn't it make sense to go back and take a picture of strong triggers 10, 15, 20, 30, 50, 80, 100 times, however many times it takes, until you can be in a live market and say, hey, there's that darn strong trigger look that I saw in all those stupid pictures Mark makes me take. And then price reaches an area and absolutely no trigger lines break through and it's a termination condition. In the live market, you're like, is it? Is it not? Shit, I have momentum. Do I go long? Maybe I don't go long. I don't know. But if you've taken 50 pictures, you sit on your hands and you wait. And then you say, hey, look, now my smalls are above, and you take that picture. This has the potential to break. And if I get a reversal bar, where's my area? So Rob, when you take pictures of things that aren't moving, right? You take pictures and you see exactly everything. When nothing is moving, what happens is it makes it easier to catch it in the live market. So absolutely, I say take pictures all day long. And I do that. Oh, here we go back to Sunday school. Because you have to learn the looks so that they're easy. You have to know what it looks like for a high probability trend trade to set up so that you can catch a high probability trend trade. You have to know what a momentum trade looks like so that it's not as daunting as you get into it. So taking pictures, going back, studying historically, understanding the correlation, Everything that we're doing is a process, right? Rob, I want to grow corn. Move pics to the spreadsheet. Cool. So I take the picture. Do you have Snagit or Capture, Rob? Let's go through the lesson. So you have Snagit. So you're cool getting to this point, right? Got the picture, all good. Awesome. So over here, where it says share, I want you to hit the drop-down menu. And I want you to go to screencast, and I want you to click on it. Whoops. Okay, that's right. Share them to screencast. And what it's going to do, and you can't see it on the other one, is it's going to give you a little pop-up that says that the link, the screencast link, is now on your clipboard. Are you good with that? Can you get the link and come in and drop it in the room? Like that? That's the first part. You got to be able to get to the link. So take a picture and drop a link in the room for me. Okay. So here's your spreadsheet. That link stays on your clipboard until you do something with it. So you're going to right click and just paste. And there it is right there. But what happens is it's pretty, like that doesn't, who wrote ass on my spreadsheet? It's just the link. Can you get to this point? We're good here, right? You're okay? Okay. So once I have the link in, that's kind of a mess. I want to know what was going on, especially as I begin to work on management and stuff like that. So I'm going to go to the Insert tab. That's the first step. And then from the Insert tab, I'm going to go to the Link button. And when I click on the Link button, it gives me the hyperlink. And the coolest thing is, Rob, is after you do this like 4 times, when you right-click on your chart, it's just going to default you straight to the hyperlink button. So under the address, I'm going to put that screencast address. I'm going to put the location of the picture, and that's going to let my computer know where to look for it on screencast.com. And under text to display, I'm just going to describe it. And then I click OK, and there it is right there. I've got my link. So if I'm here and I click Insert in the Link tab, text to display is going to show what's in the box already. So I have to take that text and put it down in the address, and then I'll change this out to go to test. It was a kick-ass long too. It's my spreadsheet. I can swear on it if I want to. And then what this does, Rob, is if you go back and you take this picture, right, and you wake up tomorrow morning and this is the first thing that you look at, strong triggers, no termination, pullback to resistance. The idea, Rob, is that you're going to be looking for this. You're going to be looking for those strong triggers. You're going to be looking for no termination conditions. And if you have it, you're going to look for a pullback to an area inside of favorable large triggers. And that one's into the term. Split triggers. Pulled all the way back, didn't it? So you get into this point where you just see the same thing over and over. And when you see it over and over, and I always tell this to people, I had someone go, man, Mark, I wish I could read charts like you did. Guys, everybody can read charts like I did. If you take this picture, right, and then you go to, whoops, wrong one. And then from this picture, you compare it to your spreadsheet, to your checklist. Let me take a picture of the checklist. Why do I take the picture? Because I'm learning to police myself. So what I've done, Rob, is I've created this look. I've identified the looks. I've associated rules with them. I've identified the area. I've done all this stuff. And I know without hesitation that this is, in fact, a high probability trend trade because it fits the list perfectly. So the more times I see this, the easier it is to catch it. The easier it is to catch it live. Because in the live market, you're going to say, man, I have triggers that are up, but uh-oh, look, there's the gap theory twice, guys. 2 times the gap theory kept you from going long. And now you don't have the momentum, so there just isn't a trade there. So I hope that makes sense. There's a termination. There's 2 divergences off of a termination. It's pretty cool. And it's a process. I want to make money just like everybody does, guys. I want to make money the same way you do. But my desire to make money has never made me money. The process makes me money. Learning how to identify the advantages, learning how to take the entries, learning how to manage those great entries. That's what produces results. And the most important thing outside of understanding what you're looking for is having the ability to do absolutely nothing when what you're looking for isn't present, right? If you're trying to time the tide so that you can jump off a cliff, there's only one right time to do it, or you hit the rocks. I don't know if anyone other than me has ever done that. And it's got to be just right, or you break both your legs. And trading is kind of like that. It's got to be just right. And then it's pretty effortless, and it's a lot of fun, and you high-five your friends. But if you keep looking for trades rather than advantages, well, then you end up with some challenges. Guys, what do you want to talk about? I've run out of pictures. You guys have stopped giving me pictures. So you guys that are in here, maybe you're working on an Apex account, right? Maybe you're working on your funding. How's it going? How are we doing? What's your biggest problem that we can talk through? Haji, you posted? Man, how do you wait for me to go on a tangent, don't you? This is like the 3rd time. You said let the gap theory do its thing. And you take the shot, right? And you're out quick at trouble. And then the gap theory's back in effect. I love this trade, Haji. This is a termination, a reversal. You let it correct and head back up. You let your smalls and your large be the same. You've got the area. Not a high probability trend trade. But that's taking advantage of momentum. Taking advantage of momentum. No, Cav, you got it. I've said I'm almost there 1,000 times, but I get smarter every day. It's kind of cool. I see something new every day. Things that I didn't recognize even a month ago, I see every day, and I'm like, oh my gosh, that's so easy. How did I miss that? Right? And you're gonna do it too. You're gonna be like, oh my gosh, do you remember when I couldn't figure out a termination condition? Do you remember when I would go long right here and get stopped out and get mad about it? It may be. Paul, are you saying when that mid-band acting as a termination reversed the market and gave you odds favorable momentum, that a pullback to resistance inside of favorable large triggers might be a pretty good look? So what kills this one? All day long. Guys, what keeps me out of this trade? What's the one thing that could make me cancel that order? I've got momentum, right? And I've got a clear path. And here comes my reversal bar. Maybe. The only thing that's going to make me cancel that order is if it hits a fib before it hits my entry. Does that make sense, everybody? That's the only thing, because then I won't have a clear path. So, Rob, this is why we take pictures, brother, because I've got odds favorable and I've got a clear path. And it took me a fraction of a second to identify the area inside of triggers. And man, it's pretty much just a mid-band at 87. So since that's going to come down as this goes up, maybe I go to 85. And it might not get me. I don't know if it's going to. But I know without a doubt that this is my look. This is what I'm willing to risk my money on. And then if it does come and get me, oh, dag nabbit, we hit a fib. So now I need the small triggers to get to the other side, suggesting that this fib has the potential to break.
Order canceled.
And notice how my areas are getting to the wrong side of the triggers now. So I'm into a termination, and all of my potential areas are on the wrong side of my triggers. So I don't have a clear path, and I'm not going to have an area inside of favorable large triggers. So now we just have to see if everything catches up and sets up. And that's all it is, over and over. I'm waiting for the trade. It didn't give it to me. I'm waiting for the trade. It gave it to me. My rules are met. I'll take a trade. My rules are not met. I will not take a trade. Guys, that is divergence from a fib. No triggers through. Textbook termination. And guys, we just do this all day. Termination. If one divergence didn't scare you, a second lower should have. If a second lower didn't scare you, a third should have terrified you. And there's the fourth, just to make sure that you don't try that darn long. It's just rules, guys, every day. The same place that it's made in long trades is the answer, Walter. And thank you for posting that, because sometimes people see things a little different, right? So most of us don't have any trouble finding a long trade because it's easy. It's easy to say, hey, everything's going up, I'll buy the market, right? So I'm just going to use this right here. But the idea, Walter, is that when I have strong triggers down, when my path is clear, I'm just going to sell a pullback to resistance. It looks exactly the same as if I have strong triggers up, the path is clear, and I buy a pullback at support. For longs, everything must be going up, and there should be a pullback to support. We buy low. And the exact same is true for shorts. If everything is down, we're going to sell a pullback to resistance. And it just looks like this. It's a pullback to an area inside of favorable large triggers. But the rules are the same, 100%. If I took this picture and flipped it upside down, I wonder if you could do that on here. Probably not. Probably not. But if I flip this picture upside down, let's see if we can do it in Snagit. Get some stuff off of here. All right, so I am going to take this picture . That's not the one. I did this yesterday on accident. See if I can do it again. Nope. Okay, hold on. Do you take delivery of even a drop? Nope. So that's a good thing. So Walter, do you see strong triggers down? Let me make sure that we're clear on this. Do you recognize the look for strong triggers to the downside? It looks exactly like strong triggers to the upside, right? It's just going the other direction. No? Small's below the large. Here we go. Let me go back. Are you okay with strong triggers up? Small's above the large. Everything is green. Space between the two. So I want you to look right. Where are your smalls? They're below. It's like a mirror, isn't it? Above, space, wide, green. Below, space, wide, red. So depending on the background of the color, or the color of the background, you're going to know which trigger configuration to look for. Do you want the small above the large, which is strong triggers up, or the small below the large, which is strong triggers down? So Walter, a great thing that you could do is I want you to open up your largest chart. And I want you to just scroll back. And I want you to look for strong triggers down, smalls below the large. And that's the only thing I want you to worry about for like the next 3 minutes. Smalls below the large. And say to yourself, that's strong triggers down. Smalls below the large, that's strong triggers down. And I want you to see how the market goes down. Smalls below the large, strong triggers down. Smalls below the large, strong triggers down. So that's the first half, is just get used to that look, because it's weird to sell a market, especially if you've grown up with stocks and stuff like that. But do you see how every time you had strong triggers almost, that market tended to continue down? Does that make sense so far? That's your first look. That is the predecessor to everything that you can do in the market. So when I have strong triggers, Walter, my job is to sell a pullback. That's what these tails represent, is a pullback on a smaller, faster chart. So now I'm just going to go the other way, and I can even go both directions now. With strong triggers up, I'll buy a pullback. With strong triggers, get through the mix. With strong triggers down, I'll sell a pullback. So what you're doing is you're just getting your mind right that, Walter, you are a trading machine and you can make money either direction, but you got to make sure that the triggers lead the way. You have to make sure that you have those strong triggers. And then once you have those strong triggers, let's see if we can find it. Ooh, I thought I saw a circle. Maybe not. I'm not sure what day I'm on. I may be a couple days back. But once you have it, you can sell the market. Notice how here price reached support and you never had that momentum. So we weren't looking for a short trade yet, even though the background's red. Even though there were multiple divergences. Rule number 2 keeps us out of that trade. So what we're waiting for is some giddy up to the downside. And that's exactly what we had here. They just didn't give us an entry. But Walter, here we go. I've got strong triggers. I'm just looking for a pullback if it'll give it to me. And it really is. It's so similar to the longs. I wish I could just invert a picture. I wish I had something that would allow me to invert the picture. Because strong triggers down are just the opposite of up. Hey, Joel, you too. Does that help a little bit, Walter? So in the moment, just look for the strong triggers down and kind of get comfortable seeing them. Awesome. I'm telling you, I argued with my brother for 2 months straight, Walter. I said, how can I sell something that I don't own? How could I possibly sell something that I don't already have? And it was hard for me to see shorts. But eventually, it all came around. Look at that, guys. Termination, gap theory continues up. The momentum is going up, but we reach resistance. Oh, it's just hard to capitalize on that one. Once you're good at reading charts, guys, that's going to be your trade right there. That's a momentum trade. So, good stuff. It's all patterns, ladies and gentlemen. That's all it is patterns. It's finding the pattern that wins more than it loses. And once you find that pattern, looking at it so many times that it's easy to catch when the market is moving. and then just taking it over and over, right? 1-to-1s, no triggers through. As much as it upsets me, my rules aren't meant for shorts anymore. Stronger triggers right into resistance. As much as it grieves me, I can't go long because rule number 2 hasn't offered me a clear path. That looked pretty all right though, didn't it? In at the bottom of the window at the lowest point of support, all that momentum coming from a termination, that was the potential to break, right? That one hadn't broken yet, so maybe that wasn't our trade. Maybe that wasn't the best of the best. Be a waiter, ladies and gentlemen. Be a waiter. It's only 11:22. Let's see what Paul says. Paul says when crude oil is cranking down, he'll grab a little momentum. I love that, Paul. Nice trade. So guys, this is an awesome way to use it. Notice the large chart. The large chart is absolutely screaming to the downside. It's coming from a termination. So Paul says, I may not get a pullback that I'm looking for. Let me let the small triggers break the area. And if it pulls back to that fib at 62, hell, I'll use that strong triggers, and see if I can't get down to that next area. Paul, I love this trade. That's it. And then, Paul, the worst case scenario is you get in there, right? And it gives you the old up, down. You know where your stop has to go. And you're good. Way to add that one in, man. Really strong work. I love those. It's low risk. It's high reward. I see Ron just gave you a chili dog. I know that was Ron too. So, whew. All right. So let's start addressing the people in the room that have been doing this for a while, that are back in my classroom because maybe they're not finding the success that they want. And if you're in here, you don't have to raise your hand. You don't have to tell me that that's you. But one of the biggest things that I have found in my experience teaching people in the last 3 years, one of the biggest things that I've found is that people begin to struggle when they look for more, if that makes sense. People begin to struggle when they try to do what the people around them are doing. People begin to struggle when they stop focusing on advantages and they start focusing on trades. And a lot of you guys probably are like, yeah, that's me, right? The days that I wake up and want to make money are the days that I typically lose money. The days that I wake up and want my rules to be met are the days that I typically make money. And I think you'll find a lot of people are like that. Has everybody seen The Last Samurai? And a lot of you know where this is going. I'm just going to give you guys the clip.
Please forgive. Too many mind.
Too many mind?
Too many mind.
Mind the sword.
Mind the sword.
Mind the people watch.
Mind the people watching.
Mind the enemy.
Mind the enemy.
Too many mind.
Too many mind. Guys, that is...
No mind.
No mind. Guys, that is like, that should be your battle cry. Too many minds will mess up a good thing. Keep it simple, keep it focused, let it be basic. And what happens is you'll typically find your way back. So a lot of you want to find these momentum trades, but you're not giving yourself the time to study them, right? You just want to take them because you saw Paul take one. You just want that momentum trade because you saw Ron take one. Well, if Ron can do it, then I can do it, right? There was a great discussion in Traders Chat yesterday where somebody was not going after, but talking to one of the traders going, hey, tell me your entry logic. Tell me your entry logic. And guys, it's nobody's job to teach you their entry logic, right? You've got to go through and do the study and the repetition and put the work in. And what'll happen is you'll develop your own entry logic. You'll develop your own plan for success. You'll develop the own patterns that appeal to you. So the same way Walter It's like, dude, I'm struggling with shorts, right? I have trouble seeing shorts. You may see a momentum trade. You may see an HVA trade. You may see a trade that appeals to you. But until you do, it's okay to take trades that have been proven to win more than they lose. It's okay to take trades that revolve around advantages. It's okay to manage aggressively and get paid until you're able to break out of that new user thing. And we're all in the new user thing at some point. And if you learn a new trade, congratulations, you're back to that new user thing. But I find that I typically am more effective when I'm not trying to find all the trades, when I'm trying to find the best trades. Your results may vary. Past results are not indicative of future results, so on and so forth. Disclaimer, disclaimer, disclaimer. I never tell you guys how to trade. I teach you how to read your indicators. And that's the most important thing. Did I miss any questions? Walter, we got yours. Dwight, your biggest problem is when the rules are met and you enter the trade and price comes towards your stop loss, you move and increase the loss. So why is that, Dwight? Can we talk about that? And it's really a pretty simple answer. You just don't trust yet, and that's okay. At 8:37, thanks, Ron. You just don't trust the idea of where the market shouldn't go, right? If you know where it should continue, and this is for a high probability trend trade. So let me find it. If you know where it should continue for a high probability trend trade, you know where it shouldn't go, right? And you've got to trust that look enough to keep your stop in place. Dwight, if you're taking trades outside of the high probability trend trade, well, then you're going to have to do the research and figure out where the market isn't supposed to go on your trades, right? And without seeing your trades and what you're taking, it's difficult for me to give you that feedback. But if you're moving your stops, you probably don't trust the look. I took a short trade today, and I even told my brother they're going to have to come get me. With this look, the only way that I'm getting out of the market is if they come get me. And then Ron, not a trend trade. It's a termination with weak triggers and a divergence on the right side of everything and a pullback to the reversal bar marker. Steve, I've never adjusted my trigger settings in my life. Ron, this is beautiful. Termination, and then eventually you see patterns that allow you to take advantage of the termination. Steve, when you say trigger settings, for crude oil, I use the same that I've always used. If I'm going to use the range chart, it's an 8 range. I use a 13.2, a 5.1, and an 8 range. That's it. But I'm using the 8 range with the faster triggers. Really shouldn't work trade. So if you look at my crude oil, that's my NASDAQ. Hold on. If you look at my crude oil, it's just a 13.2 and a 5.1. And then I use the 8 range triggers, but I use the faster trigger line. And I use these two as a momentum indicator. That's it. So when I get to the wrong side of it, I don't take the trade. And then when I get a close below, I'm willing to enter the trade. And that close below, just for grins, gets me into this short trade here to take me down. So it's new. Haji, show me your charts. On your range charts? I don't know where it's from, Steve. It's a faster trigger setting. Here, I'll give you the settings. I know that you're better at this stuff than I am. And I'm okay admitting that too. But if I remember right, I don't know. Is that my indicator setting? That is. Let me see if it goes any bigger. That is everything that I have on my chart. Yeah, let me just give you the template. Holy smokes, that's so much easier, right? Hold on one second. I got you, bud. That's so much easier. Boom, boom, boom. No, I got the template for you. Let me get that for you. Let me run over to... You want the workspace? I'll give you mine. There you go. There's my crude workspace. No worries. Go through, though, before you try to use those small triggers. And then, Haji, which charts don't have the white bars? Before you go through, I want to say that it was this one. Oh, because there are no white bars, I'll explain it real quick. Steve, I think it's this video that talks a little bit about the trading logic using those and the trades that John's teaching in the other room. Haji, so the 13.2 and the 5.1 are dynamic Renko bars, and they smooth out the look. On the range chart, what a range chart is it's a volume indicator, and it shows you a couple different bar structures. So while the 13.2s are very smooth, you can see on the range chart from 11 to 25, that is an 8 range, right? Yeah, from 78.11 to 78.25, there's a range there. And the bar will make a down bar if it reaches the bottom of the range here, and it'll make an up bar if it reaches the top of the range there. So the market flow chart is the chart that a lot of people are going to add a little later in life. Because in order to be successful with it, you have to be very comfortable with your rules being met. And if you're not good at momentum and termination conditions and all that good stuff, it's 78.3. Oh, that's a reversal bar marker. I answered the wrong question. This white 78.30 is where my large chart reversal bar marker is. That's all it is. And you know what? I don't use this one. That just happened to be in the template. The one that I'll use on this chart is this reversal bar marker. That's the one that tells me where the small chart one is going to be. So here, watch this. T3 Fibs Pro Trader, reversal bar marker. Let's see if we can get that off of there. Hey, Ron, take care, man. I don't need it. I can see it right here. 78.30 is where the large chart is going to create a reversal bar. 78.16 is where the small chart is going to create a reversal bar down. That's all those are. And you'll watch this come up. Ron has a trade that uses that one, so it's awesome for him to have it on his smaller, faster chart, but I just don't need it. Weak triggers, guys. Pushing up. Terminations to the upside. A lot of times weak triggers and divergence. They're looking for that mid band. We'll see if they get there. And then Steve, if you have any questions about that chart, let me know. But it's just a range chart. And for you guys wondering, yeah, I figured you would be, but I wanted to throw that out there. All the dots, all that stuff, don't bother yourself trying to read it. That is too many mind, plain and simple. What do we think about this? Weak triggers into resistance and 3 divergences. We'll see if that's going to be the top for real. I don't even know. It's 11:35. I like it. So let's go through. Dwight, anything I can help you with? Gino, Joel, Cav, Vittorio, Adriana, Bob, Donna, Surgeon, JW, Haji, Jim, Cindy, Ty Man, Joel, T45, E. Webster, Pinyeski, Jeremy P, Walter, Soph, Nexgen Mark. Nexgen Mark, is there anything I can help you with? Arturo, Grant, Roku, C-Dub, Debbie Robb, Bogsy. It's, I don't know. I don't know if slow's the right word. It's done all that, just not many opportunities. And I think that's a better phrase, right? It's not that it's slow. You just haven't had the rules met a lot. So if you're not trading a lot, Cab, great job. Great job if you're not taking trades into areas, if you're not taking trades without momentum. And that's it, guys. I had a friend that used to say, some days you're the boot and some days you're the butt, right? And the easiest way to avoid being the butt is to follow your rules. Miss Michelle, nice to see your smiling face in here. Learning to be patient's not easy, man. It's like learning to swing easy. Is there anything I can help you with? We're just waiting for things to set up, waiting for either terminations to win from the top side or for them to head to the downside. I think Tom Petty said it, the waiting's the hardest part, right? That's it. This is where people start to get tempted. Oh, I think it's going to go up. I better take a long. Or, ooh, it might go down. I should take a short. Well, Michelle, I'll tell you, I love John's class, but you've got to remember the basics, right? Because John's class just says, buy a Fibonacci breakout. When you have momentum and everything is up and the triggers break through, right? Take the momentum trade. But the reality is that if you don't understand terminations, if you're not cool with momentum and all that stuff, it gets tough. And I firmly believe that if you're not making money conservatively, there's no reason to try and make it aggressively. And this isn't a high probability trend trade, guys. This is me trying to anticipate the breakout, but it's virtually no risk. It's less than 3 ticks, and there we go. I'm out a couple bucks. And now I wait for the next best opportunity. And I like that trade, and it still may go. But that was my one shot at a breakout, right? And you've got to get these rules. And I love my brother's class. Michelle, I use everything that he teaches, but I only take about a third of the trades that he takes. Maybe even less than that. I tend to trade very, very conservatively. And that's just me. But what's cool is I can take everything that he taught. So everything that he taught you is solid gold. But you have to learn how to apply it to what you're using. And so I've got a piece of paper on my desk. I'm going to do this for you guys. I'm going to take a picture of the piece of paper on my desk. And I'm going to send it to my brother via Skype, and then I'm going to steal the picture. So he's going to wonder what the heck I'm doing, sending it to him on Skype. Maybe I'll email it to myself. But I want you guys to see the piece of paper that's been on my desk for as long as I can remember. And I'll open up my email and I'll show you guys. And I don't mind sharing this. Hopefully it went through. But it just says, don't fight the 34 triggers. That's the first thing that it says. It says, don't fight the large chart. And it just says it on a piece of paper. And then it says 13 color. Make sure that I'm always trading with the direction. My small chart, don't fight the trend on that one. It tells me to remember that the path is clear. And then below those three things, it reminds me of what it is that I'm looking for. It reminds me of exactly what I want to have happen. I want 3 to 5 trades a day. I have to be patient. The large leads, not my market flow chart. And Michelle, if you've taken his classroom, that's probably the biggest challenge. Broken versus hope it's broken, and make sure that when I'm looking for trades, I have strong on both. This is my entire trading plan, ladies and gentlemen, and it's set up for a momentum trade or trend trades, and that's it. But I have this piece of paper on my desk, and I stare at it every day as I'm trading the markets. And it means that a lot of the times I have to say not my trade. And Michelle, that's the hardest thing to do. It's just not my trade. I want it to go down, but it's not my trade. I think it's going to go up, but it's not my trade. That was the attempt at the breakout, and it didn't work. So now I have to sit tight and not try to take it another 32 times. Now I have to wait and see if that was just a little bit of overrun or if they are going to continue up. And guys, I'll take this trade every day because it fits my plan, because the triggers are strong, because it has the potential to break, because it broke and pulled back to the area. And then over here on my market flow chart, I had a look that I look for to get me into that trade as well. So, but less is typically more. And Michelle, I don't know if you do this or if any of you guys do this. What's your thing? And I've said it before, and maybe it doesn't make sense. Let me pull up a Word document real quick. Make the font really, really big. What's your thing? And guys, everybody should ask themselves this. What's your thing? My thing? Trading in determination conditions, right? Maybe that's my thing. Or my thing is not having momentum. Or my thing is fighting large chart triggers. Have you guys identified what your thing is yet? They got you this time, huh? Weak triggers, weak triggers. No areas inside. 2 out of 3, right? So, okay, so patience is your thing. So how do you develop patience? And Adriana, is your thing trading into them? Is it not understanding them? Right? What are you breaking? So Michelle, if you're not patient, you've got to figure out whether it's rules met versus rules not met. That's the first thing that you have to do to develop patience, guys. And that's why it's so much easier to learn how to be patient with a very simple approach. So, okay, so termination conditions. So this is yours right here then, Adriana. Trading into a termination condition, right? That was my big one. How do you fix it? Well, the first thing you have to do is you have to know which lines could potentially be one. That's the first thing. So Adriana, what I did, termination conditions was my thing. My brother pointed it out in the classroom in front of God and everybody, and it terrified me. But I would take that long trade and lose it. And my brother literally said, how many times are you going to trade into that area hoping it breaks rather than just letting it break, waiting for the clear path? So what I would do is every time I was about to take a trade, I'd take a picture of the large chart and I would have to write down whether it was a termination condition or not. And I'd have to go through that recipe. Price reaches, where are my triggers? And for this one, it's potential to break, not broken. And I would go through this. And I would have to take the picture and that would slow me down. And if I missed the trade, it was my own fault for trading in determination conditions. And then what I would do is I would do that every time I reached someplace. And what I started to do is I started to recognize really what it looked like in the moment on those termination conditions. And it was enough to keep me out. And So now that you know your thing, your first priority before you ever take a trade should be whether or not you're trading into that thing. And I've got a great picture on that I made for somebody else about those magenta and divergence lines. And this was made, I don't know what the date was on it. Let me see if I can find out. This was made, I don't even know. It doesn't tell me. But this was made because other people, Adriana had the same problem with divergence lows and magenta highs. And this kind of gave the rationale of what it means. It means that anytime the market has one of those divergences, that represents a very specific point where not only could the buyers not move up or the sellers not move down, but the opposing side stole their momentum. So it becomes like a line in the sand. So you see these pivot stop outs, you see these divergence highs and lows, and you know without question that there is probably somebody waiting there to push back against your trade. So you've identified your thing. So now every trade that you go into, start talking to yourself. Is it my trade, right? Not having momentum, find large triggers. Rules met versus not met. This is what does it. Speaking in terms of advantages fixes your thing. So Michelle, patience, for you it has to be rules met versus rules not met, which means that the only way that you're going to beat that is if you have a very simple, easy to read checklist on your desktop that tells you what your rules are. If you don't know your rules, if you're willing to change your rules at a moment's notice, then you're going to overtrade. And then Roku, same thing. It's going back and seeing these rules met and these winners produced enough to make you be okay not having it, to be willing to say it's not my trade. But you have to identify your thing. What's your thing? My thing was termination conditions. My thing now, because I get so amped up on the market flow chart, is I'll fight the large chart. I'll fight the large chart triggers. So in order for me to fix this, I have to make sure that I'm never fighting it. But that's what's on my mind every time I take a trade. Whoops, I didn't mean to save that, but two divergences. The path still isn't clear, is it? I took the one shot at it, and now until that path clears, I don't have a trade. So guys, ask yourself this afternoon, what's my thing? Arturo, your thing might be not being able to see the entries in time. Your thing might be wanting to jump in. And look, it made it to the mid band, didn't it? Remember when we drew this circle 20 minutes ago? That this typically results in that. Guys, your thing is not having patience. So you just recognize these patterns, guys, and it takes a while to build trust. And then Walter, once again, patience comes from trust, understanding that there's a best look and then there's an I hope look, right? I hope the market goes down, and Paul, I'm sorry to do this to you. I hope the market goes down from this fib despite not having strong triggers. I hope the market goes down from this fib despite not having areas inside of favorable large triggers. Sorry, Paul. Does that make sense? So how do you get patient? I'm going to insist that the market have strong triggers. I'm going to insist that the market has a clear path, and I'm going to insist that the market pulls back to an area inside of triggers. And guys, if you see this enough, you believe in it. And once you truly believe in it, you will fall on your sword and die before you let them take you out of this trade. So you have to identify your thing first. You have to know what your thing is first. And then you work on fixing it. So if you're over trading, you're not following your rules. That's it. You're adjusting your rules based on your emotion. I know because I've done it. Um, if you're over trading, you're probably every one of those trades isn't rules met. And guys, if it is, if you take 10 trend trades and all 10 of them lose, well, then the market's not doing what the market typically does, and you've got to be willing to walk away. You have to have a stop loss in place, the same way you have to have profit targets in place. It's a journey, guys. It's a journey, but the cool thing is you've got the best software in the world for the journey. You got me. I'm pretty committed to your success as you enjoy the journey. All you got to do is ask for help. I'll always give it to you. Man, caught between terminations. They're still trying to break, aren't they? Still trying to break. I actually like that look. Right there where everything rolls and heads the other direction and all the momentum is up. I would have taken the exact same trade here that I did there probably. Who knows? Guys, is there anything else you want to talk about, or should we call it a day? Y'all did great today. Lots of great questions, a lot of great opportunities to learn. I suppose